Hi guys, it's Jason from Liberty Bunker. There is a lot of things going on in the world at the moment. There are a lot of moving parts, and for the average person on the street, it is incredibly difficult to work out what exactly is the crux of the problem. What is going to be the thing we should all be keeping an eye on? Now, I think it's going to be the monetary policy and the fiscal response by governments and by central banks that will determine how low our living standards will go in the United Kingdom and the rest of the Western world, as all the problems we are seeing compounding at the same time: recession, viruses, social unrest. It's all compounding, it's all building up. But it really depends on what the government and the central banks do. That's going to determine how things bad are for the average Joe on the street, myself, and presumably you watching this video as well. So this was a speech given by Gertjan Vlieghe. He is an external member of the Monetary Policy Committee at the Bank of England. Very powerful person, one of the people who will determine the interest rates that the Bank of England sets and how much quantitative easing, how much currency debasement that the Bank of England do. So I spent my time last night reading this whole document. It's incredibly boring, as most of these monetary documents are. However, buried right at the bottom, I'll leave a link in the description if you want to read this at your leisure. But buried near the bottom, it's generally near the bottom where you actually find the interesting stuff in these central banking documents and speeches. So monetary financing. Let's take a little read through this. Having explained how the Bank of England balance sheets reflect different types of monetary policy operations, I now want to tackle the issue of monetary financing. I've talked about this in many other videos. I tend to refer it as debt monetization. This is the central bank conducting quantitative easing, buying government bonds in the UK gilts, and that is essentially funding government spending. Rather than having to sell bonds or gilts on the market to private investors, the Bank of England or other central banks has come along, essentially print money or quantitative ease, and they just essentially acquire these bonds. So it's debt. I call it debt monetization. Bank of England, Jan here calling it monetary financing. There is confusion over what this term means, and it leads to an unproductive debates. This is a really important bit. We say we are not doing monetary financing. I'll say that again. We say we are not doing monetary financing. Bear that in mind, because that will be important later. The Bank of England claim they're not doing monetary financing according to our definition. That's definition 21. So we'll take a look at that. They're using this here. So Governor Andrew Bailey described monetary financing as a permanent expansion of the central bank balance sheet with the aim of funding the government. Financial Times, 5th of April 2020. Now, the Bank of England started QE back in 2008 after a housing bubble popped. We were going into recession. That was the first time the Bank of England really conducted quantitative easing on any large scale. 2020 now. That happened 12 years ago. It's still on the balance sheet. So arguably, by any same definition of any definition that I would use, I would say yes, they are conducting monetary financing, debt monetization as I call it, because it's been 12 years. The debt hasn't been unwound. But the Bank of England claim, Jan claims, Andrew Bailey claims, the governor claims that they are not monetizing the debt, but I think by any sane definition they are. How? Just remember, bear this in mind, they say they're not doing monetary financing according to their definition. And someone else says we are in fact doing monetary financing according to a different definition. That is the argument about definitions rather than about what we are doing. One rather mechanical definition is that monetary financing means financing fiscal spending, i.e. government spending, with central bank money rather than issuing government bonds. I think that's a very good definition of debt monetization. It's the definition that I personally would use. The problem is, as I have explained in the earlier sections of this speech, this description fits most central banks' monetary policy operations. Well, that's fine then. That's fine. It's fine if you monetize the debt, because if the Fed are doing it, if the ECB is doing it, if the Bank of Japan is doing it, they're all doing it. They're all monetizing the debt. So it doesn't matter. It doesn't matter that the Bank of England are doing it, because all the central banks are doing it together, because they've all been to the same schools. They've all got the same education at the same universities. That's why they're all following the same hymn sheet. In the UK and elsewhere, when a central bank issues reserves, the main counterpart asset on the central bank balance sheet is generally some form of government financing. Note that even though a strict sense of some part of government spending is always financed by central bank money, is not the same as saying that this part of government borrowing is costless. This is another point to bear in mind. The government owns the central bank. This is part 2 you need to take a little note of, bury it in your brain somewhere. The government owns the central bank. At least in the case of the Bank of England, it's not quite as clear-cut in America with the Fed. That's a privately owned bank. The government owns the central bank. So 2 points you need to take away from this. The government owns the central bank, and the Bank of England claims they are not doing monetary financing. Okay, so let's continue from here. So with a mechanical definition of monetary financing as financing fiscal spending with central bank money rather than government bonds is not useful. To some extent, central banks are always doing that. Qualifying this definition with amounts or time horizons does not help either. Is it okay for the central bank to finance some, but not too much? How much is too much? Before the crisis, central bank money in the UK was about 12% of government debt. Now it's 26% of government debt. In Japan, it's 42% of government debt. There is no clear threshold beyond which monetary financing is too high. Well, hold the phone a minute, Jan. 1 minute you're saying the BOE isn't conducting any monetary financing at all. Now you're saying it doesn't really matter. Monetary financing doesn't matter because there isn't a too much, as long as investors believe the government finances are sustainable. So we're in some kind of Schrodinger's cat analogy here, where Jan is saying the Bank of England isn't doing monetary financing, but if it were to be doing monetary financing, and it sort of is doing monetary financing, it doesn't really matter because investors believe the finances are sustainable. Okay, so without resorting to inflation, and given the low levels of government bond yields and break-even inflation rates in the UK, investors clearly do believe that government finances are sustainable without resorting to inflation. And what about the time horizon? Bear in mind, I said earlier that, Bank of England started QE back in 2008, is now 2020. It's been over a decade. They haven't unwound that QE. Is there some sort of time horizon? Is it okay if you're going to unwind the debt in 100 years' time? Is that monetizing the debt? So let's read what Jan says about this. What about the time horizon? Can we say that a temporary operation is fine, but a permanent one is not? That is problematic too. We carried out several rounds of QE operations after the financial crisis, 2008, expecting them to be unwound some years later as the economy improved sufficiently. But the economy did not improve sufficiently. The neutral rate of interest rates fell more persistently than we expected, with the result that the amount of gilts we own has so far not been reduced. So they're not doing currency debasement. They're not monetizing the debt. This isn't monetary financing. They are going to unwind it eventually. I mean, it's been 12 years. It's been 12 years, but we haven't done it in that time. We're going into another recession now, so it's probably going to be at least another 12 years before we unwind it. But Jan says we're not doing monetary financing. This isn't debt monetization. This is frankly insane. How this guy's well, I know why he's a doctor from the LSE, clearly, judging by this, but it's mad. I think this is frankly insane. I propose that these types of discussions about monetary financing definitions are not useful. One person might say we have never done monetary finance. Well, you said that. You said that literally 3 paragraphs ago. You said the Bank of England doesn't do monetary finance. Another might say that we are always doing monetary finance. That would probably be someone like me, I guess. And in some sense, both are correct. What insane world is this? He started this here at the top of 7, giving Andrew Bailey as a citation that we say we are not doing monetary financing according to our definition. And then you go back, you literally 4 paragraphs later, both are correct. This is Schrodinger's cat. The Bank of England is both currently monetizing the debt, it's simultaneously monetizing the debt, yet also not monetizing the debt at the same time. It's a cat in a box that's simultaneously both alive and dead at the same time. It's just infuriating because this is going to affect everybody. This is going to lower my standards of living as a British citizen. If you're watching this and you live in the UK, it's going to be lowering your standard of living. As this insano clown world policy unravels, we're all going to be affected by this. But Dr. Jan from the London School of Economics doesn't see this problem as both simultaneously monetizing the debt yet not monetizing the debt at the same time. Frankly insane. How this is anything more than just a spoof parody piece I don't know. So let's focus on what really worries people, some people. Is this going to end in inflation? I'll answer that question, yes. Or even in hyperinflation, as in the Weimar Republic or Zimbabwe. When people worry about monetary financing, these historical parallels are often what they have in mind. And I just want to skip a little bit. I just want to read from here. If we were the central bank of the Weimar Republic or Zimbabwe, the mechanical transactions on our balance sheet would be similar to what is actually happening in the UK now. Well, that's no way terrifying, is it? So what Jan is saying is if you look at the balance sheet, it would be very similar to the Weimar Republic or Zimbabwe when they went into hyperinflation. So no need to panic. Everything they're doing is similar. It parallels the Weimar, it parallels Zimbabwe. Both were destroyed by hyperinflation. Don't panic. I mean, the balance sheet essentially would look similar, the same. There were strong parallels from what the Bank of England is doing, what the Weimar were doing, what the Zimbabwe central bank were doing. Don't be terrified by that information in any sort of way. That is not where you would find the smoking gun. The difference would be that government would be telling the central bank what to do. Well, remember point 2 where I said make a note that the government owns the central bank. This should terrify anybody. The difference would be that the government will be telling the central bank what to do. Well, as Jan says, the government owns the central bank. Tell them what to do, implicitly or explicitly, in order to achieve fiscal objectives while subordinating any inflation objectives, a situation also known as fiscal dominance. Why would that ultimately lead to inflation? I'm just going to end it there because my blood pressure is going up. But we'll read this bit. Now, the Bank of England is supposedly independent. I mean, it's owned by the government. Imagine this analogy. I say you own a shop. But I actually own the shop and I actually choose who manages the shop. So who really owns the shop? It's your shop. Everybody says that, you own the shop, but it's actually my shop and I actually pick who manages the shop. Who really owns the shop? Most people would say that I actually would own that shop in that analogy. This is exactly how the Bank of England works. So we'll read from, let's read this bit. So today, we are owned by the UK government, as Dr. Jan correctly points out, who appoint all of our senior policy makers. So you do not get to be one of the policy makers at the Bank of England unless you were approved by the government. So when you say it's completely independent, no, it's not. Because the government choose who are the policy makers. So you're not someone like me. Well, for a start, I'm not a doctor from the LSE, so they'll never pick me anyway. But someone with my thoughts, with my monetary outlook, would never make it as a policymaker on the Bank of England because they're only looking for a certain type of character. They're looking for someone that wants to push zero interest rates or even better negative interest rates, someone that's a money printer, someone that is prepared to debase the pound sterling down to zero. That's the only way. So no, it's not independent of government because government own it and they pick who the policy makers are. So it's in no way impartial. It's in no way independent because the government has complete control over it. That's the shop analogy, right? It's your shop, but I own the shop and I also pick who the managers of that shop are. It's not really your shop. It's my shop. It's the government shop. It's not independent. It's clearly. This is from the Bank of England website, right? This is the Bank of England's own website admitting that it's independent. It's the Schrodinger's cat analogy again. The Bank of England is both simultaneously independent yet owned and controlled entirely by the UK government. So it's simultaneously independent yet not independent at the same time. The Schrodinger cat analogy is definitely getting used a lot today. Well, that's pretty much it, guys. I tell you what, my blood pressure is going up quite a lot. I'm actually sweating through sheer blood pressure and anger at this point. I mean, it's just incredible. It's just incredible that serious people that are taking decisions that will affect you, will affect me. The money supply in the UK is already centrally planned, right? They control how much money supplies in the system. They control the interest rates. They control how much money is printed. Money is entirely controlled by this small group of people at the Bank of England, and then higher than them is essentially the UK government itself. It's very worrying. I mean, they say they're independent. It's not really. And they say they're not monetizing the debt, yet they clearly are. By their own definitions, they are monetizing the debt, but however, they're not monetizing the debt at the same time. It's a wacky one, guys. It's a wacky one. Everybody should start becoming aware of exactly what is going to happen. It's not going to be good, with absolute lunatics like Dr. Jan and everybody else on the Monetary Policy Committee at the Bank of England are going to ensure that your life, your living standards are going down. My living standards are going down. Every citizen of the UK is going to be affected by this insane policy. It's insane. Read the document yourself. I'll leave a link in the description. Most of it is just, NPC jargon, but from point 7, bullet 7, it starts getting quite interesting. They buried it right at the bottom. It's just an interesting one anyway. Things aren't going to be good with absolute clowns running the show like Dr. Jan, Andrew Bailey and everybody else at the Bank of England. There's no hope in sight, because they're always going to make the wrong decisions. They're going to print money, they're going to debase the currency, they're going to destroy everybody's living standards. Don't worry, the balance sheet looks the same as the Weimar and Zimbabwe, but somehow, through some grace of God, apparently it's not going to happen in the UK. Anyway, I'm going to wrap the video up there, guys. If you watched it to the end, brilliant. If you like this video, share it, because people are confused. There's so many moving parts that are going on in the world at the moment. Virus, civil unrest, riots, crazy stuff happening. This is the big one. The monetary policy will be the defining factor that determines if your living standards go up or go down over the next decades. So I'm going to wrap it up there, guys. Thanks for watching. Jason from Liberty Bunkers sign off. If you like it, like, comment, share, subscribe. As always, gold is money. Everything else is just credit. And I'll see you in the next video.